Hey, it's Todd Ault, and these are Wall Street words. Today's word is prepayment risk. Now, why would there be any risk to getting paid early? Let's say you're an insurance company and you buy a bond, and that bond has quarterly interest payments, and you need that money to take care of your policyholders. Well, if you buy a bond that can be paid off early and rates go lower, you are in prepayment risk, meaning that someone can pay off that bond early and then you as an insurance company do not get those payments. This happens in MBS or mortgage-backed securities and all kinds of corporate and municipal bonds. Prepayment risk is for someone that's worried that they won't get income from bonds that could potentially be refinanced or paid off early. Today's word is prepayment risk. Now, as a side note, there's a lot of complications to prepayment risk, and there are specific terminals like a Bloomberg terminal, which you can put a bond in and look at its maturity dates and when it could be paid off. Very complicated, but in simplistic terms, prepayment risk is the risk that your bond you own is going to pay you early. Prepayment risk is the word today.
Hey, thanks for watching Wall Street Words. New words and terms delivered every single day. Please subscribe, push the bell. If you found this information helpful or you think someone could benefit from this information, please share this video. Thanks for watching our channel. Always good things happening here.